I'm Charlotte McLeod with the Investing News Network, and here today with me is Ross Beaty, Chairman of Equinox Gold and Chairman Emeritus of Pan American Silver. Thank you so much for being here online with me today.
My pleasure, Charlotte. No, my pleasure. It's sort of strange hearing Chairman Emeritus. I just retired from Pan American as chair just a couple of weeks ago, so it's still hard to handle that after 27 years. But Chair Emeritus it works too.
Yeah, a little bit different. And I think maybe that's a good point to start off with you right now, just to talk a little bit about your involvement in the resource space at the moment, how you're playing this current bull market as you take a little bit of a step back, but obviously you're still involved in many different aspects of the market.
Yeah, I mean, I really am taking a step back. My decision to retire from Pan American Silver was after 27 years. Was just because the company is a fabulous company. It's in great shape with wonderful people, and it's time to step back. You can't be chair forever. You can't be a driving force forever in a company, or you get stale. And I think it's just part of good governance to have managed succession. So that's what I did with Pan American. But I'm by no means gone. I'm still very active with Equinox Gold, trying to build that into becoming a really world-class company here based in Vancouver. And I've got my finger in various other exploration pies like Lumina Gold and Luminex and a few private projects. And so I'm still actively engaged, but I'm definitely sliding towards diminishing activities rather than increasing activities.
Right. Well, thank you so much for being here to talk about what's going on. I think we'll start off with gold. We last had the chance to speak sometime during last summer, and you mentioned that the key factors for gold at the time were increasing currency debasement and inflation. We've definitely seen the conversation around inflation pick up this year. So I wanted to ask your thoughts there, what you're seeing and how it relates to gold.
Sure, it's almost for me a kind of a broken record because I've been bullish on gold for since 2016, really, and so far it's been the right call. I really love gold, and I've been really challenging myself to figure out, a bear case for it, and I just can't find one, which sort of scares me by itself because I tend to be a bit of a contrarian. Everything that's happening today, everything that happened last year, and things that were moving towards bullish conditions for gold 2, 3, 4 years ago, pre-COVID, all of that was just the volume just turned up during COVID, and it's not turned down. So there's a synchronous flooding of world markets with liquidity. Some of that's finding its way into gold, into real estate, and other stuff. Some of it is juicing demand for certain goods, causing inflation. That's a real thing, and that's going to filter down, I think, to the labor market. Quite frankly, labor unemployment's going to decrease. Labor is going to start wanting a little bit more of the pie. That will feed more inflation tendencies, and so I just don't see how the gold party is going to end anytime soon. The trouble with a lot of investors is they're just too short-term focused. They look at all the noise that comes out of the news media that everybody every second can look at the gold price, can look at all the factors that are influencing it, and they just get all this all these trees that means they don't really sit back and look at the forest. And if you do that, if you actually look at the forest and get away from the noise, you just have to look at these secular trends, these long-term trends, and what's driving those trends. And everything I see in the macro environment is bullish for gold. So I don't know when it's going to blow through. I'm sure it'll blow through $2,000 again, probably this year, maybe not even very, very far away. But I can't tell you exactly when and exactly how high it's going to go, of course. But I'm just convinced we are in a secular bull market. It's not over, and it's going to keep going up, and it's going to favor gold mining companies, gold equities, generally speaking, exploration stocks, producing companies. And if anything, it's the equities that will by far deliver the best returns for investors, by far, because just this year in 2021, there's been this very strange disconnect between the value of the gold equities and the value of gold itself. Gold has had a really nice run. It's up, I don't know what it's up, 20, 25%. But the gold equities just haven't responded. So I'm just looking forward to seeing that happen. And when it happens, it's going to be a really nice time for investors.
Okay, a couple of things I want to follow up on in there. A lot of the time when you talk about the gold market, you speak about it in terms of what inning are we in? And I think last summer we were
Yeah.
at 4 or 5. So where are you seeing us right now in those terms?
Yeah, I mean it's the same kind of thing. I didn't actually just say that. I said we're the fourth, fifth inning. Today we might be in the fifth, sixth inning. But this game is going to go into extra innings. It will, because again, the forces that are driving gold are stronger than I've ever seen in my career, and I just don't see those ending anytime soon. We cannot increase interest rates to stem inflation because that'll crater major markets. Even if we do, though, that should be good for gold. Even if major markets crater, gold should be a beneficiary. If the US dollar weakens, gold should be a beneficiary. But even if the US dollar strengthens, I think gold will remain strong. I just think in this particular environment, gold has a really, really good outlook. I don't mean crazy upside. I don't mean 3,000, 4,000 anytime soon, but I certainly think it's extremely strong at these levels. The trend is higher. If I were investing in the sector, I'd buy gold equities. I'd buy a basket of gold equities, a few producers, a few intermediates, a few juniors, and a few explorers. And I think you're going to have a pretty happy outcome.
Yeah, and you've just answered one of my next questions, which is going to be, where do you see opportunity in the gold space among the equities? Would it be, a particular tier? But it sounds like it's really across all sizes.
Yeah, I mean it's like everything, Charlotte. When the market is good, when the tide's coming in, all ships are floated, and the reverse is true if we're in a bear market. It doesn't matter what you invest in; it's probably going to go down. So that's the general broad picture. But inside that picture, of course, there are companies that are better than others. There are management teams that are better than others. There are properties that are certainly the driver of value is the quality of the assets that these companies have. And there are some companies that have better properties than others, more growth, more diversification, less risk on ESG matters. Those are the sort of things that investors should look to. And there's a lot of ways to do that. It's not very difficult. I think I really think there's great opportunity right now in the gold space.
Right. And of course, our audience always loves to hear what's going on with the price. But I wondered if you have any reflections on trends that you see going on among the companies right now.
Well, there's always trends. It's a very tough business, mining. And right now, the trends, there's just so many risks. I mean, you have all the risks of discovery and of development and financing and all that stuff, getting a mine built. But that's just the start of the risks. You have social risk and political risk and environmental risk and right now the winds that are blowing almost synchronously in the world are winds that governments are asking for more and more of the take from mining. And in my career, I go back quite a long time, quite a few decades. This is sort of a wind that blows strong and then it ebbs and it flows. And it's just one of those sort of strange cycles that's happening. And it typically synchronous with high metal prices. So right now, whether it's Mexico, Peru, Chile, Europe, Nevada, to Kyrgyzstan, I mean, I could just reel off Papua New Guinea. Every government wants more, and they're trying to kill the goose that lays the golden egg. And they are short-term thinking. They're not understanding the nature of investment in mining, how long it takes, how you need a healthy return. To encourage exploration, that high risk endeavor, you need some notion of high reward, and if you don't have that, you're not going to get that risk capital to come in and explore and lay the groundwork for what can be a successful, enormously wealth creating mine in the future. And of course, governments always love to take all the upside, but they forget that we are in a cyclical world, and when cycles turn, they never try to give any of that back to companies when they're really struggling. They just keep having their hands out. So this is a very strange thing. It's blowing hard right now, and I don't know how to fight it. And then the other thing that's different now than it was even 10 years ago is the incredible focus that investors are requiring companies to place on ESG matters, environmental, social, governance. It's nothing particularly new to me. We've been doing it for years and years in Pan American and the other companies I've had. It's whether it's CSR or social license or triple P bottom line, whatever. You just you just have to look after these things if you're going to do your job. And if you do well in those areas, you actually make more money. But today, it's a wind of change that shareholders are absolutely demanding it. It started really heavily around the push to slow down climate change. So a lot of people wanted to say to companies across the board, public companies generally, we've got to do something. I mean, each company's got to do something. I mean, you're going to be scrutinized on your record in this area. Do something now and deal with it and be transparent and open. So that was the sort of start, but it's morphed into diversity, equality, community relations, and of course environmental protection, climate change, carbon minimization, carbon pollution minimization, and that's what investors are demanding. Well, on the ground, every mine is different, every project's different. There are small companies and big companies. Some can handle this, some can't. So it's a much easier thing to say you're going to do than it is to actually be on the ground. I mean, I've had an example just in the last year where as much as we try, and this is Equinox Gold, we have a fantastic management team, absolutely dedicated, sincerely dedicated to strong ESG principles and strong ESG actions on the ground. We have 7 operating mines now, I think, producing 600 and some thousand ounces this year. And one of those mines in Mexico, for a whole bunch of reasons, mostly historical, we had a community blockade. And because we had a community blockade, all kinds of do-gooders in various places, especially Canada, who had no idea what was really going on the ground, they jumped on the bandwagon and they made a big fuss about things. And it was hard to handle. It took 6 months or 5 months before we really got to the solution on the ground. But this is a new thing. You asked me what are the new things in the world that are happening, and that's a new thing. Having to deal with all this. Social media, being what it is also somewhat difficult because you can have, like, we had another situation in Brazil where we had a like a 10,000 year storm event. Believe it or not, it rained 450 millimeters, I think, in one day. That's 45 centimeters, 20 inches in one day. It's a lot of rain. And an old pit that had been dug by a bunch of illegal miners called garimpeiros overflowed and washed some dirty water into contaminate a little town's water supply. Well, instantly, we were blamed at having a tailings failure. Our tailings were fine. There was no tailings failure whatsoever, and we had nothing to do with the water discharge. But all of a sudden, media all over the world jumped on us, and especially in Brazil, where they've had some real horrible tailings disasters. We were stigmatized by this when we had absolutely nothing that happened that we could have been faulted for. So that's the world we live in, and it's a new world, and it's hard to manage by companies when they've already got all these other risks that they're having to handle. It's the world we live in. We've got to do it. It just makes mining a tougher business. And out of all of this, I'll just finish with this long rant. The result of all this is that mining is going to be more difficult. It will take longer to build mines. They will have a harder time getting their social license. This will mean supply will go down and prices will stay higher for longer. That is what is going to result from this situation. And it's already happening.
Very interesting, and interesting to see the conclusion that you draw from that. One follow-up point on ESG, you mentioned this is something that investors are increasingly demanding from companies, but do they have a sense of what they want to see? Do we have yet, this is our checklist to know you're doing a good job at your ESG?
Right. It is a bit of an issue right now because you've got these companies that exist now to sort of rank and scrutinize ESG programs, and they're all using different metrics, and it's very confusing. It's confusing for companies. It's confusing for investors. That's just because it's a relatively new thing, and it'll eventually, I think it'll sort itself out, and I think it will be. It's pretty clear to me that what ESG really is. You don't want to pollute your environment. You want to look after your workers. You want to look after your community. You want to spread the wealth that comes from a mine as much as you can, and you want to try to have as much equality and diversity built into your everything, built into your workforce, your board, your management team, everything. So it's kind of a no-brainer to me. That's the motherhood. The actual detail of getting there is not so easy. It's certainly more difficult. And I'll give you an example. It's women. It's very, very hard to find really well-qualified women to go into sort of middle management right now. or senior management, particularly because mining hasn't traditionally been a woman's occupation. Yes, there are some great engineers, geologists, technical people, finance people, et cetera, in mining who are women. But typically, traditionally, for the last 100 years, it's been male dominated. Now, in 20 years, that's going to change because women are going into those fields in universities, and there's just a massive number of great, well-qualified people coming into the labor force. But right now, it's not there. So there aren't that many who are well qualified, for example, to be board members. There are a bunch. We've brought a bunch in, and we'll continue to do that. But this is just the real world we live in. So that's just one example. But I certainly think it's not terribly complicated for companies to do the right thing. It's not rocket science. And if they do the right thing, they make more money. They have no fines. They don't have labor stoppages. They, all of those things flow, and they're seen to be better companies. And if they're really good at doing this, and if they're recognized as being good at doing this, their cost of capital goes down, share price goes up, and they can outcompete some of their peers. So it's a great thing to do.
Right, great points. And I want to take you over now to silver, and which is having a pretty interesting year. We've seen such interest from the retail crowd in buying particularly physical silver. So my first question for you on silver is, have we seen that interest come over to the silver stocks as well? How is that playing out?
Yeah, no, for sure. Silver stocks have outperformed gold stocks, generally speaking, in the last couple of years in this bull run, and it's quite interesting to see that, particularly during COVID, because silver demand was so heavily impacted by the decrease in global growth due to COVID last year. So it was an interesting thing to see how well silver did during 2020, and silver's doing pretty well in 2021. It's a much smaller market than gold, so a little money in or a little money out makes it a lot more volatile than just gold. It's about a tenth the size of the gold market, generally speaking. And so then there's a rarity factor in silver equities, particularly the development companies or exploration companies, because silver is mostly a byproduct metal. Most silver comes out of gold and copper and lead and zinc deposits, not primary silver deposits. So if a company finds a primary silver deposit, it's a rare thing, and because a lot of investors want leverage to silver equities, they can buy these few companies, and they've tended to outperform gold companies, both gold producing companies and gold exploration companies. So it's been a pretty good formula for most silver investors, and I don't see that changing anytime soon. Silver has got pretty good legs behind it on the demand side. It's got fairly constrained supply. Both of those are fairly bullish factors. And as you know, I'm very bullish on the outlook, the sort of macro outlook for silver and gold as money. Therefore, silver has, half of silver is as money, it's a precious metal, and the other half is as an industrial metal. So there's pretty good outlook right now for silver on both sides, on the demand side. And with demand, strong growing demand and constrained supply, that's a perfect formula for higher prices. So I wouldn't be surprised to see silver continue to outperform gold in 2021, very much dependent on how much money flows into the precious metals sector. Because if there is a real wave of, if there is a perception that inflation really is taking hold, it certainly exists today in certain places. I wouldn't say it's common. It's a common view, but there's certainly a concern. But if we see these inflation numbers tick up, you're going to have quite a move into gold, I think, and gold in that environment would probably outperform silver. But they both have good legs.
Right. And when we look at silver and hear this talk about the increasing demand that we've seen this year from investors, is there pressure on the silver miners to incite a supply response? And, you mentioned how much silver is produced as a byproduct. How able are companies to do that, to provide more silver if it's needed?
They're not able to. I mean, that's nothing. No mining company or exploration company thinks about supply, global mine supply. They just don't have time or focus. They're trying to discover, add to resources. They're trying to increase production. I mean, they're so focused on those kind of things that nobody can look at the macro outlook for silver. They just have to cross their fingers and hope the price is going to go up while they develop what they're doing as well as they can and as quickly as they can. That's how the market works.
Fair enough. And I also want to make sure before we wrap up to touch on any other commodities that you might be interested in or bullish on at the moment, aside from gold and silver.
Well, copper. I mean, it's copper's been has had this glorious run for the last couple of years. Copper's got great legs too. It's an energy metal. I've had that view for years and years, and it's it's clearly panning out that way. And there's a few other metals. I wouldn't, I've never been very bullish on uranium, because even though it's a great clean energy metal, it's just nuclear reactors just can't compete against renewables these days, and they have other risks. I've never been terribly bullish on lithium, even though I'm a huge champion of lithium and lithium batteries on the demand side. This demand's going through the roof, but thank goodness for that, or thank goodness for the fact that there's a lot of lithium in the world, and because there's so much supply, I just don't see prices changing that much. Maybe I'm wrong, but I think we could increase lithium demand 10 times, and there's a lot of lithium in the world that'll supply that demand. Price will go up a bit, but it won't go up anywhere near that much. And that's a great thing. That'll allow the lithium battery business to be stable and long-term until we can start to recycle this kind of stuff and then make it into a much more sustainable business. I wouldn't look for cobalt, because cobalt, there's just not enough of it in the world to be a significant factor in batteries. And the other stuff like nickel's good, aluminum's good, manganese, magnesium, these are all battery metals. Rare earth metals, if you can get a good rare earth deposit right now outside China, that'd be a very valuable thing to do, but it's hard to find. They're really rare, and good luck to you. Platinum, palladium, it's kind of wobbly because the use for platinum is relatively speaking jewelry. Palladium has fuel cell applications, catalytic converter applications. Some are stronger demand potential if we increase electric cars. Some are less demand potential if we increase electric cars. So they kind of wash out. But I think right now, we're in a world where the economies of the world are going to bounce back after COVID. There's going to be synchronized global growth, some big infrastructure projects. They're good for almost all metals. So we're in a pretty happy time right now in the mining business, but for the fact that governments have got their hands out and are trying to take more of that and take away the incentive to explore.
Great. That was a good overview of what's going on in the other commodities. Just to briefly make the distinction between, say, copper and lithium, because I know we have a lot of battery metals focused people watching. So for lithium, we've got high demand, but also high supply, and copper,
Right.
high demand, but low supply. And that would be the distinction for those there.
I mean, to really make it simple, that you could say that, but I think there's more. There's not just a lot of lithium supply around. It's fairly easily mobilized supply. We know the deposits. We know how to get it out. It's not as difficult. Copper's more difficult because these are such huge deposits that require billions, and in some cases tens of billions of dollars to actually develop. They're much longer term phenomena, and they take longer to explore and to get all of your feasibility work done and social license and stuff done and then build. So I don't see the copper market responding quite as quickly as, say, the lithium market can to higher demand. That's one of the reasons why the copper price is trading for $4.50 a pound right now, because supply is harder to increase in response to higher prices. I certainly don't see copper going to $6, $7, or $8 a pound easily. I mean, there's plenty of copper around, and every copper company has plenty of deposits waiting to be built. It's just going to take a lot of time to get that into the market. So yes, I see copper being super strong, and today $4.50 a pound is a super strong price. It's a record price. It could go to $5, it could even go to $6, but I just don't see it going much beyond that. And even those prices they're going to drive more supply, which ultimately will come out and drop prices down to we'll have another bear market, unfortunately. One of these days, hopefully it won't be for a few years, but it'll come back to bite us. It always does. Isn't that a happy note to end on?
Yeah. If you have anything else, are there any other words you want to leave us with, or should we wrap it up there?
You can wrap it up there. I mean, investors have to remember that metals are cyclical, economic trends are cyclical. Bears are followed by bulls. Bulls are followed by bears. We have now been in a pretty long-term bull market in major equity markets, and recently in metal markets. So remember that. Keep your finger on the sell button just as tightly as you are going to be able to on the buy button.
Okay, well, thank you so much. Thank you for taking the time to be here. Always great to speak with you.
Okay, thanks very much, Sherman. Bye-bye. Bye-bye from
Bye.
Quarantine City. I'm sitting in a hotel room in Vancouver. Just arrived back from Mexico last night. Looking at a couple of gold mines there, and I'm sitting here on my enforced quarantine. So I'm happy to speak to you today. It's been a nice diversion from watching my 4 rooms of my hotel room.
Thank you
4
so much
walls, I mean.
again, and certainly hope you can break free soon. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Ross Beaty.